Hey guys, are you worried about paying taxes on your crypto gains? Well, in this video, I am going to teach you about the crypto tax loophole so that you can even save more on taxes. Woo! All right, as we all know, cryptocurrency was booming at the beginning of the year. So many taxpayers have come to me concerned about the gains that they have made in their crypto portfolios. And they're really concerned about the income taxes. As you know, that if you have used that crypto account to pay for any services, if you have cashed out of that crypto account, if you have bought cars, whatever you have done, you are looking at a taxable event. And as I talk to clients, these taxable events are getting larger and larger. And we all know that Uncle Sam is going to come knocking on your door and they are going to want the tax. So we have to figure out how to reduce the tax liability so that you don't have to have all of your gains sucked away by Uncle Sam. And one of the ways that you can do that is using a little tax loophole, and I'm calling it the crypto tax loophole that is in the tax code that not a lot of people know about. This tax loophole is called harvesting crypto losses. And I want to repeat that, harvesting crypto losses, something that people may not be thinking about. And they think about it when it comes to stock, but they may not think about it when it comes to crypto. So let me give you an example of how this works. Let's say that you invested in the crypto market and you invested $5,000 in exchange for some crypto. And now you're going along and your crypto account, like everybody else's, has taken a big dip. And maybe your crypto account right now is only worth $2,000. You bought it at $5,000, but now it's only worth $2,000. It's worth less. Here's the news. If you're able to sell your crypto, you would in essence have a loss, right? Because you bought it for $5,000, you'd sell it for $2,000, you would have a loss of $3,000. And you would be able to report that loss of $3,000. Here's the thing. When you have a loss in crypto, crypto is considered property for income tax purposes. It's not a security, it is property. So when you have a loss, that loss is going to be subject to capital gains losses. That means that you're only going to be able, in our scenario, where there was $5,000 you purchased with, you sold it for $2,000, took a loss for $3,000, you're only going to be able to take that additional $3,000 loss on your taxes. I want to give you another example so you can understand what I mean. Let's say in our example, you bought your crypto for $10,000 and your crypto dropped down to $2,000. That's now an $8,000 loss. You brought it for $10,000 way up here, it dropped down to $2,000 way down here, and now you're going to sell your crypto and you're going to have an $8,000 loss. Well, according to the way the IRS rules works, because crypto is property, you're only going to be able to take a $3,000 loss in excess of gains. That means that of that $8,000, you're only going to be able to take $3,000 of it, and the other $5,000 has to carry forward to the next tax year. That's because we are limited to only taking capital losses in the amount of $3,000 in excess of capital gains. But here's something really important. When you're dealing with cryptocurrency and you've had gains at the beginning of the year, because IRS is looking at your portfolio all year long. This is where I need you to go back and go, hello, let me think about what I did in the past. Do I have crypto gains? You need to look back and think about that, because maybe in January you sold, maybe in February you sold, maybe in March, and maybe now you're in November. So you got to think about your portfolio as a whole and think about the gains you made at the beginning of the year And the reason why I want you to do that, because I want you to use our crypto tax loophole, tax harvesting. When you're dealing with cryptocurrency, because cryptocurrency is not considered to be a security, wait for it, because it's not considered to be a security, guess what? You can sell your crypto today and buy it back tomorrow. Yes, you heard that correctly. You can sell your crypto today and buy it back tomorrow. And you might be thinking, Karla, why is that important? Well, let me tell you why. Because you can do that with crypto. You can't do that with stock because there's this tax rule called wash sales rule, that if you were to sell stock and you were going to buy that same stock back in the next 30 days, they wouldn't allow you, the IRS, would not allow you to take the losses. Hold on, you're starting to get it, right? Hold on, I know you're getting it. Here's the thing. You can sell your crypto. It could be down. You sell it today while it's down. You turn around and buy it right back while it's down. What have you lost? Nothing. But what have you gained? You have just given yourself a great tax treatment on your crypto. You just allowed yourself to have a taxable event that is going to turn into a loss, because you don't have to worry about that 30-day wash sale rule that is affected by stock, that is affected by other securities. So I want to make sure I go over that again, because this is so important to get you in a position to lower your income taxes when it comes to cryptocurrency. So let's run through another example. Let's say, again, you have crypto gains at the beginning of the year when crypto was really hot. It's March, it's April, and your crypto accounts were like peaking up. Maybe you were part of the November run when crypto was hitting 65,000 per coin, 66,000 per coin, and you cashed out of your crypto and you bought a house, you bought a car, and now you're going, uh-oh, the tax man cometh. What am I going to do? Now, this is where I want you to start thinking. This is where you're going to look at your current portfolio. And if you're looking at your current portfolio and it's down, guess what I want you to do? I want you to sell your crypto. You're like, what, Karla? Sell my crypto? Yes, sell your crypto right now, right today. Sell it. Turn right back around and rebuy it. What did that just do? If you bought high and it dropped, you just gave yourself a tax loss that you're going to be able to utilize against those tax gains that you made earlier in the year. Remember, I said to you that you can only take crypto losses and excessive gains of $3,000. Well, if you had gains at the beginning of the year, that might be 50,000, 60,000, 30,000, whatever that amount is, and now you have losses, you can take losses equal to the gains. You can take losses in excess of the gains, but only by $3,000. So if you have gains of 50,000 and you can make yourself have crypto losses of 50,000, you're put yourself in a great tax position to neutralize the tax. You can still own your crypto because you can buy it right back immediately, and you just use a great strategy called tax loss harvesting with crypto. That's right. It's a great loophole that I want you to look at, and I want you to look at it right now, because you could technically wipe out your taxable gain from your crypto by using this great strategy. A lot of you are asking me, when should you use this crypto loophole? You should use this crypto loophole in several different occasions. Number one, are you sitting on gains from cryptocurrency? Are you sitting on capital gains from any other type of investment that you may have? Maybe you have capital gains from a stock portfolio that you sold off at the beginning of the year. Maybe you have capital gains from the sale of real estate. A lot of you have been busy selling real estate and you have capital gains. Maybe you're in a 1031 exchange transaction right now and you decided, you know what? I don't think I want to go into another piece of property. So you would sell that real estate, realize the gain, but use our crypto tax loophole to get yourself some capital losses to offset that capital gain. This loophole is extremely powerful, and this loophole is going to help you reduce your taxes. So if you're sitting on capital gains of any kind, I want you to use this crypto loophole. The other thing that you can do when you're dealing with gains in cryptocurrency, when you're dealing with the tax implications, when you're concerned about, oh my gosh, the tax man is coming, right? Because he is. You can't hide. Here's some other strategies that you can utilize. When we are looking at taxes on someone's income tax return, we're looking at income from all sources, not just gains from crypto. We're looking at business income. We're looking at W-2 income, all sorts of income. If you can push income forward into the next year, drop your income down as low as possible, especially my business owners who control their income streams, you're going to put yourself in a better tax position, because the lower your income, the lower the tax rate. We can get you in a better position. The other thing is, if you are sitting on some gains in your crypto account and you're needing that money, look at the dates. How long have you held that crypto? If you're a few days away from it being a long-term gain, a year and a day, then wait it out so that you can get at least the long-term capital gains rates. We need to be strategic and we need to start thinking. Why? Because the tax man is always thinking, and he's thinking about how he can turn your crypto gains into new government tax dollars. So we got to be strategic and be thoughtful. If you are an investor in cryptocurrency or you are an investor in any other type of holding, it's very important that you are always thinking about how you can reduce your tax bill. Because at the end of the day, IRS is a collection agency for our government, and they're going to do whatever they can to ensure that we pay tax. It is our job as taxpayers, our job as investors, to make sure we do whatever we can to hold on to our tax dollars. Crypto tax harvesting and harvesting those losses is going to be a great way for you to reduce your tax bill, keep your tax position in your crypto by turning around and rebuying your crypto so that you do not lose out on building your portfolio. If you enjoyed watching this video, I want you to like, comment, and subscribe, and I can't wait to see you on the next video.